Once again, we're looking at that super gap on Apple, that 552. FOMC meeting today. It's a one-day meeting. Um, you have the futures market gapping higher, but once again, there was a $5 ratio gap from that close of 552. At some point, the dollar ratio gap sequences are going to have a higher price volatility reversal range as Apple works its way toward that upper end of one of our targets, I believe was in the 574 area. However, we're not there yet. And price exhaustion on the opening bell within a 15-minute plus 15 minutes equals 30-minute structure within the bid and the ask is crossing the bid crosses the ask over here. And what ends up happening is that the intraday highs pull back on a ratio of $1 and somewhere around $1.80 off of those extended highs. And once they hit that $1.80 pullback, but then bam, they come back in and you would be looking for new highs and or that lower, that common denominator that would favor that reversal would be weakening in price. Now, what does that mean? That means that the prices continue to drift lower from that pre-market short up there, which is not by much, but you're going to watch for the true price exhaustion live. We're going to be covering it with this super gap once again. How far they go, no one ever knows. It's how they're going to be stripping the premium out of the 560 put. So they were marked down $6.25. 3,155 of those were traded yesterday. The high was 14.59 yesterday. Now they're going to get marked down. We don't own these, but we're going to look at what the relationship would be in the price gap open up FOMC meeting event. So you have the futures gapping higher as they do in bull trends. And you're going to look and see where that top end of that bull gap hits at that price. And once it does, it's called resistance. Then it will set up with its normal range. The elevated ranges that you're going to be looking for are going to be 5 teeny ranges from the top reversal, and you're going to be looking once it hits the bottom, you're going to be looking at a 10 teeny reversal off of the bottom. So still, that bull side is going to be in there. So when you're still in the premium out of the 560 put here, it's just an intraday trade. It's making a market with the public here. And that's catching that lower end of this next markdown. We don't own it. See, they marked it down 6.25. And that's a 317. On an intraday level only, what I will do is I'm going to mark them down there, and we already know what the lower end of the market's MMTs. You got a 380 by a 420 bid and ask. Okay, that's that range. That's that lower end. And yes, that is a lower end of the market. Yes, it is a monthly. Yes, it is day number 2 on the open. How much premium will the market maker steal out of that? You have to remember just the other day, the close was 1680, but you can see the volume. 3,155 contracts will be marked down, won't they? Or the people that within that volume structure, rather, some will be marked down and some won't. So you can already see that the high yesterday was 14.59. Now, we're going to set alarms out here at 7.7 by 8.5, just so the MMT can get used to using the alert system. And once they are triggered, you will know where the market relative to this gap sequence, okay? And you don't have a $5 gap sequence anymore, and it's slightly diminishing in pre-market. Once again, it's the perfect training and the perfect setup with a gap open up that's already extended in a 52-week high range, and where these things eventually will hit their peaks. But then when they do have their pullbacks, whatever day that will be, they will be very aggressive pullbacks. Special feature, Apple Computer Super Gap 552, still in the premiums, setting these bid and ask on these alarms here. There is a trade based on the relationship of this gap open up sequence here to drop in the bids and marking that 560 down. So I am going to put some live orders out there for myself, and it'll probably be starting right around that 570 range, depending on where we're at. We still have 32 minutes to the opening bell in this special in this special gap sequence. Excuse me, there was a problem with the microphone. In this special gap sequence, right here, and you're looking for that setup on that opening bell of where the price will exhaust itself in this price over here. Well, once you do get hit, off of the low, these contracts are good for a $1.50 ratio profit. That's the part you want to remember. Special presentation on the Super Gap at 5:59 a.m. Apple Computer relative to understanding the wholesale markets 560 put that's in the money at the next level, understanding the markdowns, understanding where the volume was yesterday. We have it all right here. So where will the top resistance level relationship to the markdown here, to the wholesale price here, that will have support? Because you'll hit that final resistance level in the gap sequence opening bell. So your gap open up ratio is right here to the bid, 556.60. That's what it's worth right now. And super gaps, price deflation, when you get that reversal, the reversal will have in the price volatility ranges, there will be 3 teeny reversal. 1 bar will confirm that price exuberant high reversal with high frequency computing machines within the ECN tape, electronic communication network. Who is that? Buyers and sellers are matched up. So we're going to see where the low side of that 552 to this low on that opening bell, and that will be 30 minutes from now, where the support levels will be and where the higher end of the new super 52-week high Apple will be before, at some point it's price exhaustion opening bell gap.